The markets are closed, but the business stories are just heating up. Hello, I'm Raine Musñgi. Catch up with us on Newsfeed Business. U.S. President Donald Trump will announce plans to impose reciprocal tariffs on other countries over the next 2 days. The American leader doubled down on comments he made on Sunday as he signed 2 proclamations ending all exclusions on steel and aluminum tariffs, raising duties on both metals to 25%. The U.S. tariff rate on aluminum increased from its previous 10% rate and eliminated country exceptions and quota deals, as well as hundreds of thousands of product-specific tariff exclusions for both metals. A White House official confirmed the measures would take effect on March 4th.
Simplifying our tariffs on steel and aluminum so that everyone can understand exactly what it means. It's 25% without exceptions or exemptions. And that's all countries, no matter where it comes from, all countries. If made in the United States, however, United States of America, there is no tariff, is zero. So if it's made in the United States, there is no tariff. All you have to do is make it in the United States. We don't need it from another country.
Trump said he was also looking at tariffs on cars, semiconductor chips, and pharmaceuticals. A U.S. official said the exclusion process begun under Trump had gotten out of control under former President Joe Biden, resulting in approval of hundreds of thousands of specific product exclusions. U.S. President Donald Trump has agreed to consider exempting Australia from his steel and aluminum tariffs. Prime Minister Anthony Albanese said he had a constructive phone call with Trump and is confident a deal could be reached with him. This comes a day after Australia's trade minister said Australia's steel and aluminum exports to the U.S. created good-paying American jobs and were key to shared defense interests.
I've indicated there's strong bipartisan support for AUKUS in Australia and in the United States. I presented Australia's case for an exemption, and we agreed on wording to say publicly, which is that the US President agreed that an exemption was under consideration in the interests of both of our countries. We'll continue to engage quite clearly constructively, but can I say this? It was a very constructive and warm discussion.
Trump later said he would give great consideration to Australia's request for an exemption to the steel tariffs due to that country's trade deficit with the U.S. Well, market focus is now on U.S. President Trump and his announcement of new 25% tariffs on all steel and aluminum imports, along with other reciprocal tariffs on all countries this week. Stocks of steel and iron ore manufacturers fell up to 2.4% in Europe, and European steelmakers account for about 15% of imports into the United States.
German markets and German economy is reacting quite resilient on this announcement of 25% tariffs of steel and aluminum. Simply because, first of all, it was expected, so at the markets, financial markets, it was already priced in. And on the other hand, everybody, most of the people and the investors are hoping that the so-called preparation of the EU on reaction of this announcement will at the end come out in a more proper way to acceptable level of tariffs. So overall, hope is what drives the market. The coming up tariffs on China, Mexico and Canada already announced a couple of weeks ago and now coming into detail will be definitely a huge problem for the overall worldwide economy on one hand, but on the other hand, even there, the hope that EU, for example, is prepared for certain tariff negotiations with the US, and the expectations are therefore that even there regarding China and Canada and Mexico, the tariffs will not have this impact as feared weeks ago.
Trade frictions would make the Eurozone's inflation outlook more uncertain. That coming from European Central Bank's President Christine Lagarde. She said inflation is set to return to the 2% medium-term target this year, with risks on both the upside and the downside.
Exports should also allow and support the recovery as global demand rises, although in that respect, it's obviously conditional upon changes and developments that we will observe in international trade policies. And despite rising real incomes, households are hesitant to spend more. And yet the conditions for a recovery remain in place. A solid job market and higher incomes should strengthen consumer confidence and allow spending to rise and consumption to be a driver of growth.
Gold extends its record-breaking rally, surpassing the key level of $2,900 for the first time. Bullion has already hit its 7th record high this year, driven by Trump's tariff threats, which have fueled uncertainty over global growth, trade wars, and high inflation, prompting investors to turn to gold as a safe haven asset. Philip Streibel, chief market strategist at Blue Line Futures, said gold's 45-degree rally since December might create a self-fulfilling prophecy of further price increases, potentially leading it to raise its forecast to around $3,250 or $3,500. World leaders joined business people at the Élysée Presidential Palace on Monday for a dinner held by President Emmanuel Macron following an AI summit in the capital. Officials and technology executives convened in Paris to discuss how to safely embrace artificial intelligence at a time of mounting resistance to heavy-handed red tape that businesses say stifles innovation. Eagerness to rein in AI has waned since previous AI summits in Britain and South Korea that focused on world power's attention on technology's risks after ChatGPT's viral launch in 2022. Now, as U.S. President Donald Trump tears up his predecessor's AI guardrails to promote U.S. competitiveness, pressure has built on the European Union to pursue a lighter touch approach to AI to help keep European firms in the tech race. Alphabet CEO Sundar Pichai told attendees of the AI Action Summit in Paris Monday that the technology heralded a golden age of innovation, but the outcomes of AI are not guaranteed. As countries and industry focuses more on deploying AI than reining it in, he called for ecosystems of AI innovation and adoption. Pichai pointed out AI's limitations and impact.
AI can't flourish if there is a fragmented regulatory environment with different rules across different countries and regions. And finally, governments need to take a thoughtful, strategic approach to AI to drive investment in infrastructure, people, and adoption, including by governments themselves. This is an important and historic moment. I think when history looks back, it will see this as the beginning of a golden age of innovation. But these outcomes are not guaranteed. We have to act boldly to advance the most transformative applications of AI and responsibly so that everyone can benefit. That means addressing the technology's limitations, issues with accuracy and factuality, for example, as well as the risk of misapplication and misuse, like the creation of deepfakes. It also presents new complexities, for example, the impact on the future of work, the need for energy, and the digital divide. We have a once-in-a-generation opportunity to improve lives at the scale of AI. Let's do everything to make it possible.
On the lighter side, and still in Paris, an AI-powered museum app is allowing visitors to talk to masterpieces, most notably the famous Mona Lisa. Ask Mona is one of many AI solutions exhibiting at a global summit in Paris's Grand Palais, which gathers government and business leaders, startups, and scientists to discuss the economic and social challenges of AI, as well as opportunities in various sectors. Ask Mona aims to make museum visits conversational, and visitors can ask questions to the app and get an instantaneous response, such as to why Mona Lisa has no eyebrows.
Why don't you have any eyebrow?
Of the enigma of my absent eyebrows, in the gentle whispers of time, it is said that my visage was once adorned with both eyebrows and eyelashes. Yet, as the fashion of the 16th century evolved, the practice of facial hair removal became a mark of high society inspired by the customs of earlier times. Thus, an unknown hand may have erased these features, leaving my face as smooth as the serene waters of a placid lake.
Inspired by the Harry Potter novels in which characters were able to talk to the subjects of paintings, the Ask Mona AI app brings to life, via click of a QR code, grand figures of art and history such as Victor Hugo, Napoleon, or the Pharaoh Ramses. By such direct interaction, the information shared is more personalized, and in return, such conversations feed the AI learning algorithm so that a museum can better understand its audience. Business and economy news from around the country in a moment. Newsfeed Business will be back. Stay with us on BNC. Welcome back to Newsfeed Business. The Philippines continues to pursue trade deals with the United States despite tensions in the region. Our correspondent Sujin Kim joins us on the line for details. Sujin, go ahead.
Raine, the Philippines continues to strengthen its trade, security, and investment relations with the United States amid escalating economic and geopolitical tensions in the region. The country is pushing for a critical minerals agreement with the U.S. and Japan to maintain control over its mining industry and reduce overdependence on China. More than 90% of the country's mineral exports currently go to China at low prices, prompting the government to develop local nickel processing facilities. The government also aims to attract investments from the U.S., Japan, and South Korea to prevent China from dominating the nickel processing industry, similar to what happened in Indonesia, where China now controls 90% of the industry. Experts say a U.S.-Philippines free trade agreement is now more likely under a second Trump administration, especially since the Philippines has the lowest trade surplus with the U.S. among ASEAN countries at just $4 billion. However, experts recommend that the Philippines focus on sectoral free trade agreements instead, particularly in mining, semiconductors, and renewable energy to expedite trade negotiations. Raine, from officials also assured that the Philippines should not be concerned about U.S. trade protectionism, as its trade surplus with the U.S. remains relatively small. And those are latest updates for now. Back to you, Raine.
Thank you so much for that report, Sujin Kim. Asia-Pacific markets traded mixed Tuesday as investors assessed U.S. President Donald Trump's tariff campaign. As Japan markets were closed for a holiday, Hong Kong shares advanced to a 4-month peak on Tuesday as investors navigated shifts in U.S. trade policy and waited to hear from U.S. Federal Reserve Chair Jerome Powell on tariffs and inflation. Hong Kong will file a complaint on recent U.S. tariffs imposed on the city to the World Trade Organization, claiming the U.S. has completely ignored the city's status as a separate customs territory. In currency, the Chinese yuan has weakened past the 7.30 per dollar level and traded on Tuesday morning. The Australian dollar was steady at 0.6273 to the U.S. dollar, with Trump saying he would give great consideration to Australia's request for exemption on steel tariffs. Foreign direct investment net inflows fall nearly 20% to $901 million in November. That's down 11.8% from $1.02 billion in October. It's also lower than the $1.12 billion recorded in November 2023. The central bank attributes the decline to a drop in non-resident investments in debt instruments, reflecting cautious sentiment among foreign investors. Commuter group Alt Mobility slams the proposed removal of the EDSA busway, calling it a PR mess. Alt Mobility spokesperson Jed Ugay tells the Bilyonaryo News channel the move is a step backward, warning it would bring back the heavy traffic bottlenecks experienced on EDSA before.
You see C5 and Commonwealth, which don't have the exclusive bus lanes. Very traffic na dyan ngayon. But the main point there is that we're making EDSA less efficient. The bus lanes are more efficient than the pre-EDSA carousel scenario because we're moving more people per hour on that road because buses take around 50 passengers per vehicle, while cars can only move around on average 1.5. You can say could house like 5 people, but normally it would just have like 1.5 average number of persons inside.
Ugay urges the government to focus on improving public transportation efficiency rather than removing the busway.
We should change the metrics of MMDA and the other agencies where they always focus on the number of vehicles that are being moved rather than knowing or like calculating how many people. Because if you can move like 3 buses but each would have 50 passengers each, then that's 150 people compared to moving like 60 cars. If you can see cars moving, it won't be as efficient as the bus lane.
Transport Secretary Jaime Bautista assures the public the EDSA busway will stay due to its proven efficiency. But he confirmed that the government plans to hand over its operations to the private sector to enhance the commuter experience. Philippine shares dip for the 5th straight day as investors remain cautious while digesting U.S. President Donald Trump's 25% tariffs on steel and aluminum. The PSE index ended lower by 0.8% to close at 59.87 on speculation the U.S. Fed will take a few months before cutting rates again. The main index finished the day as the second worst performer in Asia. Among sectoral indices, only financials ended in the green, with property falling the most, almost 3%. Decliners also outpaced advancers, 106 to 78. Value turnover totaled 5.8 billion pesos. Today's most active stocks ended mixed, with SM Prime Holdings falling the most, more than 5%. BDO Unibank, meantime, had the biggest gain, rising nearly 4%. Meanwhile, the foreign exchange market, the peso is currently trading at 58.17 to the U.S. dollar, weakening from the previous close of 58.09 amid Trump's tariffs on steel and aluminum. And that's a wrap for today's Newsfeed Business. Thank you for making us your daily source of financial insights. I'm Raine Musñgi. Join us again tomorrow as we bring you the stories that help you plan your next big, bold moves in business, only here on the Bilyonaryo News channel. Follow the Money is next at 4:30. See you then.